And we're live. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical, no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial, a member of FINRA and SIPC. Investment advice offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial. Welcome back. Happy New Year. Merry Christmas. We're starting off 2021.
From your room view, did you move your desk or something?
No.
I don't remember seeing this wall.
I don't remember seeing that wall either. It's a really nice, what is that, a mirror?
It's a good wall. That's where I keep all of my wedding invitations, Christmas cards.
Where do you keep all your trophies?
Probably donated those many years ago.
Do you have any trophies, Keith?
I don't. My parents had a wall full of bowling trophies, and I never really understood. Like they were good bowlers, and they had those bowling trophies, and I don't. Do people get trophies anymore? What do you think?
Yeah, they still get trophies.
Okay.
Yeah, and you know, contrary to belief, that there are some sports out there, youth sports, where they still just give the winners trophies. Pretty cool.
Wow.
I got a third place trophy for the Pinewood Derby. That was
it third place size?
Yeah. You know, there was no. Yeah. It is. I was kind of proud of it. And then we met with some LPL reps a few years ago, and the city boy kept going out to the country. I won the trap shooting trophy for the day. So I got some clay pigeons.
I think there for that, and I did not win a trophy.
I'm sorry, I beat you on that night.
Hey, it's good to be back. Good to see everybody. I have just been looking forward to Friday. At the top of my week, I thought, what interesting things do I have going on this week? And not having this call last couple of weeks is, I've just missed it. So it's good. Good to be back.
Likewise.
Amanda, what do we need to know?
Not a whole lot. If we want to start with this, we could finish with this, but over my break, just, over the holidays, it sparked some ideas amongst my family and friends, but I want your guys' take on it. I want our audience's take on it. How do you get your children off of your cell phone plan, adult children off of your cell phone plan? So that was something that kicked off 2021 in a discussion in my family. I didn't have an answer. I hope my parents don't find an answer.
How old were you when you got a cell phone?
I was in 6th grade, which made me, 12. I think I was 12.
13. I think 13 is it's a common age for kids to get a cell phone today. And I know our cell phone bill has dramatically increased because of our 13-year-old is now on the plan. And I'm real interested in studying this so I can have a few years to think about how I'm going to get them off.
I never had that conversation with my parents.
Didn't have to.
Well, it'd probably be similar. Like it's become an expectation almost, and it'd probably be like car insurance. I mean, some of you probably paid your own car insurance too, and your own gas for your car growing up. But for many folks, parents chipped in, and it's one of those things where you sit down. I can remember my mom sat me down just before I got married. They said, "We are no longer responsible for you."
Well, health insurance throws you off on your 26th birthday, so it shouldn't be later than 20. Like I would say 26 down is the answer. So that's that I would think that, but I'll be curious what our viewers' opinion is.
I guess on the flip side too is, when do you add mom and dad to your cell phone bill? Yeah, I know one of the greatest Christmas presents my dad ever gave his mother-in-law was a cell phone, and paid the bill. And basically what he was saying is, I look forward to talking with you. And so adding grandma to the cell phone bill was just an awesome pro move.
It was less expensive for us to add a family member, an elderly family member to ours than for them to get their own. So we did that this year. So we did add somebody to ours from that.
Well, I think that's a big part of this too. As I will research and I'll let you guys know next week, but a lot of times it is cheaper for the entire family to remain on the same plan. But maybe that just means the kids, you know, contribute their portion of the plan. If it benefits everyone, it's okay for it to remain, as long as, you know, the children might be pulling their own weight as well. Because yes, by age 26, we should probably be contributing to our phone bills, or are paying for our own health insurance, or so.
It's kind of a business model that's got some psychology added to it. If you're a T-Mobile and you got the kids on there at 16, I bet T-Mobile understands that it's hard for me to kick my kids off. And when my kids would want to buy a car, the bank would want a cosigner. Well, T-Mobile doesn't need a cosigner for the phone bill. It's coming to yours. So it's a great business model for people like T-Mobile. I'm not recommending you purchase their stock. I'm just saying there's some psychology behind it as well. Well, let's talk about the markets. What do you think about that?
I think the markets, they're just so fascinating to me. I keep learning and learning and learning. Every time I think the stock market might do something, it tends to do something more or something completely different. I mean, how many of you woke up this week wondering what the stock market would do tied to politics? And maybe thought, well, if the Georgia elections go one way, the market will do this. The Georgia elections go the other way, the market would do that. And were you surprised? At the end of the day, it goes back to just one simple thing. There's been more buyers than sellers.
Amanda, which screen do you see? You see the stock market?
Yeah, I see INFY.
Let's go to NASDAQ real quick. And let's see here. So we crossed over.
So are we looking at the chart, the NASDAQ chart?
Yep.
Yep.
Okay.
So we crossed over this level initially in late August. Then we just had pretty much a correction that happened in the next few days.
Yeah, September was pretty brutal, pretty fast.
Yeah, and so the market then just did kind of a Humpty Hump here and just came back right to that 12,000 level and then finally broke through it. And now we're at the 13,000 level and got there in no time at all. And one of the things that Doug and I have been talking about is the pricing of those indices. So the NASDAQ is 23% over the 200-day moving average right here. That's this.
That's like 6 months. I mean, it's just been unbelievable.
Yeah, that's this line right in here, this black line. And so it's greatly extended. It would suggest to me that the risk in the market is a lot higher than normal right now. And so I think just frankly, we're just taking a pretty cautious approach to the markets right now. We've seen the transition from more of this NASDAQ in the last few weeks over to the smaller companies, what do you call it? We're showing the S&P 500, S&P 600, right? Do you see that, Amanda?
Yeah.
Did you see the screen switch? And so, relatively speaking, the smaller companies have been just really going gangbusters here these last few weeks, and that's what we've done in some of our exchange traded portfolios, fund portfolios. We've moved money that direction, and you can see that from the bottom of the market a year ago, that's a pretty steep incline. But as we go back and look on a longer term basis or on a monthly basis, these smaller companies really aren't, I don't think, that overpriced compared to their cousins, the larger companies, S&P or the NASDAQ type stocks. And so I feel really comfortable with the decision we made to move money there.
And this space is where some attention has been received this week alone.
Yeah.
We've had some nice increases since the bottom of the market back in March. But this week alone, it's been a nice pop for some of these smaller companies. And keep in mind, when we say small companies, these are still really big companies. These companies own jets. I mean, these are big companies, but just not quite as big as the ones that you hear about and are familiar with, household names.
Yeah, so that sector of the market looks interesting. I think what we've noticed occurring is there's, let me see if I've got another screen I can share with you.
These smaller companies can tend to adjust things quickly when compared to a larger company. They can cut costs, they can be a little more innovative with their money, they can spend more money on research percentage-wise quicker. And so that's why you're seeing a little bit of a pop inside these smaller companies.
Now, did we switch over to the M2 money supply, Amanda?
Yep.
You see now?
Yep.
The M2 is a complicated idea. It basically is the amount of money the Federal Reserve is pumping into the economy. The M1 is the amount of money they're creating, but the difference mainly between the M1 and M2 is a lot of the M1 money that they create goes into the reserve system of the banks and such. And so when we got over here to 2008 and there was a lot of money being created with the banking crisis then, this M2 really wasn't increasing at a very fast clip. What's happened with what the Federal Reserve and the federal government have done in the last 6 to 12 months is this blue line is the money supply. If you look at that slope and see how dramatically arcing upward that slope is, that's telling you that money that they're printing is actually coming into the economy. So there's more money chasing the same amount of goods and services and stocks, really. I mean, the impact of this is basically what you call inflationary. And so part of stock prices being at the levels they are could just be there's excess money and it may not be measured by traditional measurements. But also, I think what we're seeing in the stock charts is that a lot of inflationary type companies their stock prices are going up pretty dramatically. If you look at things like the materials like potash, that type of thing, it's just shot through the roof in the last 6 weeks. You're starting to see some interest in the silver and the gold and things of that nature. And so this chart kind of explains why inflationary things are out there. And where I think that's most dangerous to families is it's hard to invest in the stock market. It's just difficult to do that. And because of that difficulty, it makes it simple to put the money in seemingly safe places like savings accounts or CDs.
There was an investment years ago when I first started. My branch manager, he loved this mutual fund that really focused in banks and insurance companies, and it did well for a couple decades. But here recently, those stocks have not been able to keep up and do as well as maybe the rest of the S&P 500 or the NASDAQ. But some of the banks in the last few days, insurance companies, they've really started to gain some attention. And that could be just, the rotation of stocks, but it could be a sign of, better days to come for the banks or for even savers.
And even what's been really surprising in that is we've looked at data and where money is coming into the stock market from individuals versus into the bond markets. At all-time historic lows in interest rates, money is coming out of the stock market and going into the bond market. Like in massive amounts of money. And so with inflationary sort of things going on there, is those folks that put their money in the savings accounts or CDs, it'll feel like they are in a safe place. But if inflation, creeps up to 3%, 4%, 5%, say it gets up to 5%, your $100,000 is worth $100,000 when you put it in there. A year later, it's really worth $95,000, then 90, then 85, then 80. After 4 years, your buying power of that has dropped off. So with that increase in the money supply, it's really going to put a lot of burden on individuals to pay attention to what's going on, not only on their actual value of their accounts, but with their buying power of those accounts.
Yeah, it's been a very tough time if you're a saver and risk averse. It's been tough to find anything out there that will pay you yield. And so it requires some investment, maybe a change in risk and some staying power. And one of the ways that we've tried to implement staying power is just have larger allocations to cash during risky times. And so you might see that reflected in your portfolios where you have more cash today, but that allows you to be in some investments like the ones that we covered earlier to help offset some of the rising costs and your necessities that you spend, and then also the luxuries that you spend.
Did you see we have a new world's wealthiest person?
I did.
Yesterday.
I've got to read more about him. He is one interesting guy. He's kind of like Howard Hughes, I think.
Yeah, Elon Musk, he rang the bell yesterday, and whoever that person is at the top, somebody's wanting to knock him down all the time. So that'll be interesting to watch. But we had something else really amazing happen this week, and in all the news, you probably didn't see it. This is the first month since they've recorded the data that we've imported, or the first week, 0 barrels of oil from Saudi Arabia.
That blows me away.
Wow.
I mean,
it's just amazing.
It's hard to imagine.
To be the #1 importer, exporter, and user.
Yeah. So it's hard to know what that means, but it wasn't that long ago that we were heavily dependent on Saudi Arabia and their production. And so the fact that we got 0 oil from them, that's amazing to me. That's kudos to all the engineers, all the hard workers that are out there doing those things and creating a system within the U.S. economic system to make it safer for our culture and our country where we get the oil. So it's cool. What else do we need to know, Amanda?
I don't have anything off the top of my head.
I think one of the other things just to focus on is there's a lot of political noise out there this week, especially has been pretty difficult for several of us. I mean, maybe you felt numb last couple of days, maybe you just didn't even know what to think. And would like to encourage you to stay focused. Investing in political things rarely produces good results, short-term or long-term. And what has produced great results for you and your wealth and for your family is just taking a look at what is innovative and what is efficient. And the marketplace rewards that. It also rewards staying power, maybe sitting out for a time. And that could be just like with the politics, maybe there's a time to sit out on that as well and to take in some things that add to your life. One of those things happened to me last night. I was just sitting down at my table, dinner table, finishing up a book, and my son wanted to get on a computer screen. I said, well, you've been on that a little bit today. Would you mind coloring me a picture? And I just watched my son color a picture. I put my book down and just watched him color a picture. And what it did for me was just kind of remind me of when I was a kid. And I really enjoyed the simplicity of that. And so as we go through these times, just stay invested in the things that bring life and time to your body and to your mind. And just know that there's a lot of bad investments out there, and you just don't have to pay. You don't have to give it your all. You don't have to give it every moment of attention that you have.
I think on that same vein, what I've been thinking about all week is that true leadership is lacking in our country, not just politically, but people that will do the right thing for the right reason. And it's not as evident, but I think that leadership, a lot of times, like the rudder on the boat, it's the people in the back that pull the lever on the rudder. And so you have the ability to lead, not only whether you're in business, your business you can lead, whether it's your family, but you can lead your own thought process of how you're going to manage life. And there are bad influences on your thought process, and the leadership that you can take is to identify those bad influences and eliminate those out of your regular threshold, because the more you put yourself into those situations where you see those bad influences, I think the more you're going to have difficulties within. And we've been cheerleaders to encourage people to think cautiously about the COVID, but also to think realistically about it. And so I want to just share a screen on that and just offer a little bit of encouragement on that. I know that there's all kinds of information going with this. Did that COVID tracker pop up, Amanda?
Yep.
Okay. And so a few weeks ago when we were on here, right in here, I told people I thought it looked like we were about ready to peak out. Well, maybe we hadn't peaked out yet. This goes all the way back to February when we had the blue line is a daily positive on a week. It's a weekly average of the daily positives. And then over here, that breaks down the same data with the areas of the country, the Midwest, the South, the West, the Northeast. And what really encouraged me is right here, you see where the Midwest peaked out. And my opinion is the Midwest peaked out is because the Midwest generally had less restrictions, allowed more free flow of people in the economy. And so it would accelerate the spread of this particular virus, but it also would accelerate the amount of people that have it, so that at some point when you have full exposure to it, you're going to see the slope decline. And that's really what's been going on in the Midwest. We had a little blip up this last few days, but in general, in my opinion, the coronavirus looks like that's going to be more of history than it is of the future. And so looking forward is a big deal. And as we've shown this over the months, we have 3 approved vaccines. And so the cases are shooting downwards, at least in the Midwest. We have 3 vaccines. So the attitude one might take is a positive attitude, not one of fear and anxiety, but saying, we have a record speed of getting a vaccine to the people. The vaccine is becoming more and more available. Plus, we've had a lot of citizens that have already had the coronavirus, and their immune system is going to be better apt to battle that off. And so I would just encourage you all to set your minds on things that are more positive, realizing that 2021 is going to be a great year, no matter what happened this week in the cultural and the political things. Whether what you choose to think about 2021 is going to make it a good year or not, and that's strictly at the man in the mirror. You look in the mirror and decide what you want, and that's going to dictate how this year unfolds for you.
When young families come to us about investing for the future, they start with nothing. And one way to start, whether it's your attitude on politics or your attitude on the coronavirus, attitudes on investing, is just take a step forward. You don't have to complete the race this month or next month, but you do have to start it. And taking a step forward might be just looking through your finance and saying, hey, what are the necessities that we have? Maybe knowing your necessities would help your anxiety level. If it's fitness, maybe it's just going out and taking a 1-mile run. I know Amanda had a really awesome goal for last December. Share with us what that was.
It was something super small, super attainable, and it was simple. I just tried to move. I tried to run or walk a mile every day in December. I chose one of the coldest months. That was really smart. But inside or outside, I just moved. And I ran over a marathon in one month. So I reached a little over 33 miles probably. I didn't count my last couple days, but it was just fun. It was a goal that I could achieve. It was a goal that I set. and it was just one step at a time. I was onward. So I finished 2020.
Not many people,
What's that?
not many people can say they ran a marathon, and so I love the concept of that. You say, yeah, my goal was to run a marathon this month. Oh yeah, how'd you do? I did it. I did it one day at a time.
Exactly.
And so at the end of the day, Amanda had a lot of success, and she was able to get outside. I'm sure that helped you. You know, just even upstairs, get those good chemicals flowing, but one step at a time with whatever it is that is important to you, or maybe even weighing you down, whether it's financial related or not. I think it's just a great approach. So thanks for doing that, Amanda. That was an encouragement to me.
Well, thank you. And something that we talked about on Monday, I think, Doug, we were talking about how like the word for 2021 is onward. And so 2020 was one heck of a year, but 2021 is a brand new year, and we're just moving onward.
I had a call from a 75-year-old friend earlier today, and he was talking about how they were, he and his wife were locked down quite a bit, and kind of the stress of that. But that one of the things they like to do is to go walk on the Monon over here, and that he said that helps clear their thoughts and their mindset. And I'd throw out that invitation to our viewers that if you need some place to get out, that you need some space, that you can park in the Gimbal parking lot out here, and it's a 5-minute walk to the Monon, and you can get some fresh air. You may have to, if you're gonna do like Amanda, you may have to throw a coat on or a hat and gloves, but it's a peaceful walk, and you can just make yourself at home to use our parking lot.
I'll even set outside a hot cup of coffee and a to-go cup for you. So yes, please come by. This is your place. We'd like to see you here.
Thanks,
All right,
guys.
Amanda, thanks for hooking us up today.
Thank you for your wisdom. Cheers.
Have a great weekend, everybody.
See you, everyone.